Are you looking for the next big crypto narrative? Well, we might just have found it.
You found it?
You found it.
PayFi is an emerging narrative that's flown largely under the radar, and yet it might just have the most potential of them all in 2025. As stablecoin regulations change around the world, PayFi could be the key to crypto's mass adoption and could send a number of cryptocurrencies moonwards in the process. My name is Guy, and by the end of this video, you'll know everything you need to about PayFi and which cryptos could be set to benefit the most from it. Trust me, folks, this is a video you do not want to miss. Yes, this video is about PayFi, that much is true, but no financial advice is coming to you. Decisions are yours, so be sure to think them through, and DYOR, it's the smart thing to do. Consult a professional before you ape in, and with all that said,
Let's begin.
Okay, let's start with a bit of context. PayFi is an emerging crypto sector that aims to bridge the gap between traditional finance, or TradFi, and decentralized finance, or DeFi. The term PayFi is short for payment finance. It was coined by the president of the Solana Foundation, Lily Liu, who unveiled the concept at a conference in July 2024. Now, the primary focus of PayFi is to use blockchain technology to create a much more efficient financial system than the one we're already using. That's because, with TradFi, transactions between banks can be delayed, and in some cases, simply sending money overseas can take days. Not only that, but transaction fees from banks can be expensive, which can cost both businesses and individuals a lot of money. That is, assuming they can even access a bank account in the first place. What the world needs instead is a payment solution that anyone with an internet connection can use. One that can settle international transactions in an instant and without needing to pay an intermediary their hefty fee. As Lily points out, this is exactly what Satoshi Nakamoto had in mind when they created Bitcoin. Bitcoin's white paper is literally called, quote, Bitcoin, a peer-to-peer electronic cash system. However, despite being the most established crypto out there, Bitcoin isn't the ideal payment solution and is instead now mostly used as a store of value. But Guy, I hear you ask, what about DeFi solutions? Don't they already solve this problem? Well, not quite. You see, for all the financial wizardry made possible with DeFi, there are a few drawbacks that limit its potential for mainstream adoption. For instance, there's the question of scalability, since billions of people would suddenly be sending transactions on a daily basis. As networks become congested, transaction fees would spike, making this alternative system unfeasible. Most DeFi protocols prioritize security over speed. Now, normally, this is great, but it does make instant settlements that much harder. And of course, DeFi protocols would need to be 100% interoperable to allow payments to be sent universally, in the same way you can send money between different banks, albeit often very slowly. So, as you can see, neither TradFi nor DeFi are a perfect solution. However, PayFi helps solve both problems by bridging the two, introducing instant global settlements and minimal transaction fees. Best of all, even the unbanked can jump on board. And this is precisely why PayFi could be one of the biggest developments in all of crypto, and no, we're not exaggerating. Oh, and by the way, if PayFi has got you feeling bullish, then why not pay those like and subscribe buttons with a click? Be sure to throw any spare change at the notification bell too, so you can continue to see more videos like this. So then, how exactly does PayFi work? Well, at its core, PayFi is designed to use blockchain tech to revolutionize and enhance existing financial systems. That's because blockchain has multiple advantages over the traditional system. For one, transactions are more transparent and secure, and the immutable nature of blockchains means that transactions are tamper-proof. PayFi is also built with smart contracts, which allow the automation of complex financial operations. They can execute everything needed to get money from point A to point B without an intermediary. What this allows is instant, real-time settlements not currently possible in the traditional system. Consider that in TradFi, international transaction fees from banks can be around 6%, which can get crazy expensive for larger amounts. By cutting these middlemen out of the equation, transaction fees can be as low as 0.1%, and, depending on the blockchain being used, millions of dollars could be moved around the world for a fraction of a cent. Most importantly, as we mentioned earlier, the decentralized nature of blockchains means that anyone with an internet connection can take part. It all sounds pretty awesome, right? But wait, there's more. Hey everyone, sorry to interrupt the video, but I just want to very quickly tell you about the Coin Bureau deals page. This is the place where we put together all the amazing deals and promos that we're able to offer you guys exclusively as viewers of this channel. Head on over and you will find such things as discounts on hardware wallets, some seriously impressive trading fee discounts on some of the best exchanges, as well as some frankly mind-boggling sign-up bonuses for some of those exchanges too. The link is down below. Check it out when you have a moment. Thank me later. And now, back to the video. You see, PayFi also emphasizes something called the time value of money, or TVM. This is something that Lily Liu explained during that conference, and it's simpler than it sounds. Essentially, it means that having money now is more valuable than having that same money later. That's because having that money later means it loses value through two factors: inflation and opportunity cost. As we all know, money's supply increases when central banks turn on the printer, and as such, that money devalues and loses purchasing power over time. So, the longer you wait, the less you'll be able to buy with that money when you eventually receive it. As for the opportunity cost, let's explain this one with a very basic and hypothetical example. Let's say you inherit $200,000. Lucky you. You're given the choice of receiving it in installments of $50,000 every year for 4 years, option A, or a lump sum payment of $200,000 in 4 years' time, option B. Now, on paper, both option A and option B pay you the same amount of money. But in practice, taking option A is the better deal. That's because at the end of year 1, you could invest that $50,000 into something with a steady return, let's say a bond with an annual return of 5%. By your second year, you'd have your initial $50,000 and the extra 5%, so $52,500, plus your second $50,000 payment. That brings your year 2 total to $102,500. By repeating this process, you would have $157,625 by year 3, and by year 4, you'd have $215,506, significantly more than the $200,000 you'd have if you'd chosen option B, to say nothing of the value lost to inflation over those 4 years. Basically, you can't invest with money you don't have. A bird in the hand is worth two in the bush, so to speak. PayFi can help people get the money that's due to them quicker, allowing them to do more with it. So, for instance, a small business would be able to pay its employees or buy new supplies more quickly without having to waste valuable time waiting for an international bank transfer or remittance to clear. However, in order for all it promises to be actually possible, PayFi requires 3 conditions to be met. First, the blockchain in question needs to be high performance, able to scale up with the number of transactions per second, or TPS. Then there needs to be enough liquidity in things like stablecoins to be able to handle the surge in transaction volume. And there needs to be decent liquidity of talent, that is, a good number of developers able to support all this infrastructure. Now, Lily says that the only chain able to do all these things is Solana, but obviously she's a little biased. After all, she is the president of the Solana Foundation. But stick around to see what other cryptos could play a role in the PayFi revolution. So then, by now you understand what makes PayFi tick. So, where can it actually be used? Well, there's a number of ways PayFi could be integrated into the financial world that go far beyond sending cross-chain and cross-border transactions. For example, PayFi can also create more liquidity for tokenized real-world assets, or RWAs. Obviously, this includes stablecoins, which would be the base asset for most PayFi transactions. But it also includes things like tokenized bonds or real estate. This tokenization greatly enhances the liquidity for physical assets while streamlining the entire process. For example, normally trading real estate is a slow process that involves heavy amounts of paperwork, and there are all sorts of fees for intermediaries. However, PayFi could allow fractional ownership and near-instant transactions via smart contracts. PayFi can also be used to offer consumers innovative and flexible payment options without accruing debt. One example of this is a concept called Buy Now, Pay Never. And no, that isn't some clever new way to start stealing stuff. No, Buy Now, Pay Never is a concept that Lily Liu explained, and the idea goes something like this. Say you want a $5 cup of coffee. You have $500, which you put into a lending protocol for 1% interest. With PayFi, you get that interest up front, giving you the $5 for your coffee, while the borrower repays the $500 loan. In essence, that coffee was free, and well, nothing tastes better than free coffee. Another area, meanwhile, that can benefit from PayFi is the creator economy. Hey, that one feels rather familiar. For those unaware, the creator economy is growing exponentially and is expected to reach $500 billion by 2030. However, it's quite common for creators to have to wait weeks before they see the revenue from their work. And yes, this does count as work, thank you very much. Anyway, PayFi can help creators out by providing funds up front instead, which the creator could then return from the revenue generated by their content. This allows creators to grow and develop their platforms much faster than they otherwise could. But for those of you wondering about real businesses, one example we could use is that of supply chains and trade financing. You see, it's common for supply chain operations to be slowed down due to lengthy payment cycles and locked capital. In fact, one report suggested that the limitations of TradFi infrastructure mean that global businesses are denied $2.5 trillion in annual trade finance. That is utterly crazy. However, PayFi would allow access to this massive amount of capital. That's because invoicing can be done through decentralized platforms, allowing supply chains to receive payment immediately, thereby keeping the wheels in motion, so to speak. Not only that, but PayFi can also help businesses that struggle to get any financial support from banks, which for many could be an absolute lifeline. Now, obviously, everything we've just covered here points to the PayFi sector being incredibly successful. Heck, PayFi's adoption is pretty much baked in. I mean, from a crypto perspective, this is exactly what the industry was once intended to become. Once upon a time, crypto's mantra was to bank the unbanked. That has long since debased into enrich the meme coin snipers, but, well, perhaps we're finally starting to circle back towards that original vision. Meanwhile, beyond crypto, an alternative system is an absolute necessity for many sectors around the world. When you consider that the global payments and financing market is expected to reach around $4.8 trillion by 2029, up from $2.8 trillion in 2024, you quickly realize just how much potential there is for the solutions being offered. In fact, some reports even predict that PayFi will be 20 times bigger than DeFi and reckon that the PayFi market could reach $1.8 trillion by 2030. So then, this naturally raises the question of what PayFi platforms already exist. As it happens, there have been a number of PayFi platforms pop up since the aforementioned Solana Foundation president Lily Liu announced the idea in July last year, and this number is bound to increase rapidly. For example, there's Polyflow, a payments platform that aims to address the limitations of TradFi and DeFi. Polyflow achieves this by improving scalability and transparency while remaining fully compliant with regulations. Polyflow features two key elements that make this possible. The first is PID, or Payment ID. As the name suggests, PID is a decentralized ID system that uses ZK proofs to protect the privacy of anyone transacting on the platform. The second element is PLP, or the Payment Liquidity Pool, which helps facilitate fluid transactions without relying on centralized institutions for funds. Notably, PLP uses smart contracts to reduce settlement risks and help utilize capital for both TradFi and DeFi. Oh, and for those wondering, Polyflow doesn't have a token, but that's not to say there won't be one in the future. Another example is ARF, which is a global settlements platform built on Stellar. ARF is focused on providing cross-border payments and liquidity for financial institutions. It aims to address the inefficiencies of the traditional finance system that can mean it takes days to send a transaction overseas by allowing for transactions to be settled on the day. ARF also has an innovative credit model that allows financial institutions to borrow funds temporarily during transactions and then repay those funds after the payment's settled. Oh, and again, ARF doesn't have a token, FYI. Now, of course, there are some more well-established cryptos that arguably fall within the PayFi bracket. One example here would be Ondo Finance, which is known for offering tokenized versions of yield-bearing RWAs, namely US Treasuries. By bridging the gap between DeFi and TradFi markets, Ondo opens the door to capital markets to a broad range of investors who otherwise wouldn't be able to access them. And of course, there are plenty of other PayFi platforms out there too, some of which will have crypto tokens of their own. But for those, you'll have to DYOR. So then, which cryptos should you keep an eye on as PayFi starts to take off? Well, let's start with the most obvious one first, Solana. As we mentioned earlier, Lily Liu showed a little bias in saying that Solana would be the only blockchain capable of supporting PayFi. And even though there are other chains that could benefit, there's no denying that Solana is in a good position to lead the field. Or at least it will be as soon as its Firedancer upgrade is implemented. If there's one thing the Trump meme coins proved, it's that Solana still struggles with high levels of demand, though whether any other crypto network would have been able to handle those levels of volume is questionable. Assuming the network isn't struggling though, Solana's fast transaction speeds and low transaction costs are crucial elements for PayFi's success. Not only that, but Solana's token extensions allow for programmable features that can provide privacy while giving enough visibility to remain regulatory compliant. This could be huge for getting institutions to jump on board. Anyway, another chain that could do well is, believe it or not, Ethereum. While transacting on Ethereum isn't particularly fast, or cheap for that matter, it is worth noting that Ethereum still hosts the lion's share of DeFi activity. Logically then, it's likely that this could spill over when it comes to PayFi. Of course, it'll likely be Layer 2s that see the most adoption for PayFi transactions, since Layer 2s are designed to be more scalable, meaning much faster transaction speeds at a fraction of the cost. If we had to guess between which of the many Ethereum Layer 2s would benefit the most, we'd probably go with Base. Not only has Base seen exponential growth in the Layer 2 space, but it also benefits from Coinbase's massive user. Base is also highly scalable and has minimal transaction costs, and Coinbase wallets have even introduced a handy tap-to-pay feature, all of which make Base a great choice for PayFi solutions. Not to mention that Coinbase itself is hyper-focused on regulatory compliance. The only downside is there's no Base token to ape into, yet. Or how about Algorand, which has a focus on real-world applications like digital payments, making it perfect for cross-border transactions. Not only that, but Algorand has some pretty impressive partnerships with government projects and global organizations that could seriously drive PayFi adoption and, potentially, send algo flying. Then there's Aptos, which is insanely fast thanks to its use of the Move programming language. Not only is Aptos capable of sub-second transaction finality, but it actually holds the record for the most transactions processed in a single day at 326 million. Obviously, this means that Aptos is incredibly scalable and would likely cope well with the sudden influx of PayFi users. And of course, we shouldn't forget about payment-specific cryptos like Stellar, which is focused on facilitating rapid cross-border transactions at a low cost, or XRP, which is specifically designed for cross-border payments in the same way, but with the added focus of institutional adoption and its partnerships with multiple banks around the world. So, there are already a few contenders looking to ride the PayFi wave, and more will surely follow. So, keep a close eye on which crypto projects look to lean into this sector in the coming months, because those that do it right could see big gains as a result. Make sure you're subscribed to this channel because we'll be sure to keep you updated with PayFi and, of course, the rest of the wonderful world of crypto. Now, if you're blown away by PayFi, show it by smashing that like button. It really helps the channel out. And if you want to dive into Solana in more depth, then why not check out our recent update on it over here. Thank you for watching, and I will see you again soon.